Now, I want to believe that many of last year's roughly 600 new listings are better than the 300 that we got in the dot-com. But the recent action tells me they aren't. These broken IPOs have emptied the pockets of investors, and they're now tired of losing. Yet they're selling their winners to fund the overhyped losers rather than take a hit that's really already been taken for them. On top of that, you now have a host of companies that most people have no idea how to value. I mean, sure, there were lots of crummy enterprises that never should have gotten through the IPO chute, but there were hundreds more that totally caught the fancy of Wall Street because they had tremendous revenue growth. They all seem to have similar characteristics. They were cloud-native software providers that offer something as a service and secure data while helping customers in a secure way with a 360 approach to all things digital. We've had so many of these cloud deals that we simply stopped being able to value them on anything but press releases and sales forecasts for the out years, very much like the end of the dot-com era. The promoters tried to figure out new ways to pitch them: enterprise value to sales, Tesla's similarity per share. Those superlatives, they ran out in November. And in the end, at the very top of that month, it was all about raising price target. That's a double-edged sword. And now cutting price target is the only mention you hear, at least for the ones that anyone still talks about. Given that many of these newly public stocks are bunched into stupid ETFs, their individual price target cuts can drag down a host of other names in a vicious cycle downward. These newly minted stocks and SPACs are now killing us. It's the excess supply that's dragging down the rest of the market. Sometimes I wish we had some sort of minor league stock market so we could, kick them over to that. You know how, in soccer over in Europe, they send them down to another league? We need that here.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.